Today I'm going to show you ICT's simplest setup, the 2022 mentorship model. So here's basically how this model works. The checklist is simple: a liquidity sweep, a market structure shift, and a fair value gap. So basically, most of you probably already know what a liquidity sweep is, what a fair value gap is, and what a market structure shift looks like. But if not, don't worry. Let me quickly give you a small introduction to each of these before we dive into the charts. Liquidity is usually found at old swing highs and lows, session highs and lows, and the previous day's highs and lows. These are the levels where traders often place their stop losses. The market targets these areas to grab liquidity before moving in the main direction. That's why liquidity is the most important part of every setup. Now let's move on to a fair value gap. A fair value gap is a three-candle formation where the wicks of the first and third candles don't touch, leaving a clear gap on the middle candle. This gap shows an area of inefficiency in the market, which price often comes back to fill before continuing in the main direction. And lastly, a market structure shift. A market structure shift usually forms after a liquidity sweep. It happens when price breaks a swing high or low with displacement. After a liquidity sweep, this shift signals a potential price reversal and confirms that the market is ready to move in the new direction. All right, let's move on to the first example right here. First of all, we have a sell-side liquidity sweep. After that, we drop down to the 1-minute time frame, and here we can clearly see a market structure shift. Price displaces through this high with strong momentum, and during that move, it also forms a clean fair value gap. So we enter on that fair value gap, stop loss goes below the low, and our targets are set at the recent highs. And this is basically what the ICT 2022 model looks like. Here we have another example. First, look at this sell-side liquidity sweep right here. Now, what do we need? We need a market structure shift. And here it is. See how price generated this high, retraced back into a fair value gap, and then displaced higher, breaking the high and forming a new fair value gap in the process. Take a look at this small fair value gap. This is where we're going to take our entry. Stop loss goes below the recent low, targets at the recent highs, and see how nicely price goes straight into our target. Alright, now let's look at the last example. Here we have our buy-side liquidity sweep, and right after that, we get a small market structure shift. Market generates a low, then sweeps the buy-side liquidity and immediately displaces back below the low, leaving behind a fair value gap. We're going to take a short entry inside that fair value gap, stop loss placed above the high, and target set at these lows. And look at this. See how cleanly price respected the fair value gap and continued straight toward our targets. Alright guys, that's it for today's video. If you found this helpful, don't forget to like, share, and subscribe. And if you're serious about taking your trading to the next level, you can get personal guidance through my mentorship program. All the links are in the description below, so check them out. Stay consistent, keep learning, and I'll see you in the next video.